On this month's breakdown of September's recap and what we can expect going into October, I got some interesting facts. The biggest one is, are these delinquency rates that we keep hearing about going to affect our market in the future? Here it is. Right, so looking at the stats from September, obviously we're in a hot market. Everybody's talking about that, but really I wanted to break it down and see what is fueling this market, what is pushing this market forward. So first thing I want to talk about, guys, is San Diego market. We've been hot for years. I've been doing this 13 years and we've hit a couple lows throughout that time, but for the most part, we're a hot market. We always have buyer demand. We have a lot of multiple offer situations, so nothing's changed in that aspect. The big change is our inventory levels. So with the demand that we always have, maybe a little bit of an uptick, but with that demand, we have no inventory. Actually, inventory levels are down 44% compared to this time last year. So obviously that's a huge amount, and that's causing for us to see prices increase and days on market decrease. So same amount of buyer activity, just less inventory for them to choose from. So homes are selling faster and for a little bit more. So what are they selling for more? Actually, we've already seen from last year at this time to this year, we've seen that the median sales price increase 11%. So kudos to everybody that purchased a year or two ago. You've seen some significant appreciation, and everything's telling us that's going to continue. We probably won't see valuations or appreciation slow down in the near future just because we have these low inventories, right? Pricing is all inventory against demand. That's all pricing is. That's how you price anything in this world. So as long as we have these low inventory levels, we should see prices continue to rise. And to put things in perspective, this month we've had just over 2,000 properties come on the market. However, we've had 3,000 go off the market. So we're not going to see that inventory level increase here in October unless we start seeing a significant amount of people actually put their home on the market. So the demand is still here with interest rates down in the 2s and inventory levels are still low. So what about these delinquency rates that we keep hearing about, right? You'll see articles talking about millions of homes facing foreclosure or past 30 days of unpaid mortgage payments. I wanted to break that down. So that is correct. We have actually 3.8 million homes that are over 30 days past due on their mortgage payments. So 3.8 million. And this is brought in by, I think everybody probably knows them, but it's Black Knight analytics company doing a ton of data research. So 3.8 million, that's a significant amount, at least it seems like it. But they always put that amount. They don't actually break it down into the percentage basis. So we actually have 330 million people living in the United States, estimated, with 64% ownership. So obviously that's a lot more than 3.8 million. And actually when we break it down in a percentage, compared to last year and this year, the amount of folks that are over 30 days past due on their mortgage payment has only doubled. It actually hasn't even doubled yet. It's at 99.8%. So we've just about doubled what our delinquency rate was last year to this year, which shocked the heck out of me because, well, we're going through a pandemic, a recession. And all that does is it confirms my belief and all the stats that I've been looking at and the stuff that I've been talking to you guys about is that we're not in a real estate recession. We're in a economic sure recession and really just in a pandemic, right? But it's actually causing the real estate market to be one of the safer investments to protect you against inflation. And people are seeing that, and that's why people are coming over in groves to purchase real estate and maybe make that move right now. So as I see it, real estate is the safest investment. Don't believe the numbers. Don't let the news scare you with these high amounts of foreclosures on the horizon. Look at the actual stats and break it down to percentages, because right now we've only doubled that super low rate that we were at last year. That amount is 6.8% delinquency. So it's not a staggering number like the unemployment number, which sure that is high at 10%. But we're not going to see that significant foreclosure crisis or any significant inventory dump hit our market to mess up our prices. So as I see it, real estate's still the safest investment. If you guys ever have any questions at all about buying, selling, investing, whatever it may be, please reach out to myself or anybody here on the True Local team. All right, look forward to talking to you. Take care.